Joining us right now in a First on Fox Business interview is Raymond James CEO Paul Reilly. Paul, it's good to see you. Thanks so much for joining us.
Good to see you again, Maria.
So, record results for the company. Congrats to you. What's behind this performance?
The biggest factors are we've had record retention of advisors. We have best-in-class retention of advisors, and our recruiting. We've been a big net recruiter now for 5 years. That combined with the market going up 25% and interest rate spreads that are an all-time high, they all combined really to give great results for us.
You have a good outlook going forward? How do you keep this going?
Well, that's the hard thing when you talk to analysts is, what's the market going to do? And I think tax reform is going to impact that. Certainly expectations, which we have 70-some% of our clients positive on the market, so that just the outlook and their feelings will impact that. And interest rates. We're at a record spread. I don't think they'll stay there. I think we'll start giving up more of the interest to clients. And so that's the pressure going forward. But so far, it's a good market. Yeah.
American net worth is now close to $100 trillion. It's at record highs as a percentage of GDP. Do you worry at all that we might be heading back into some kind of bubble territory, that markets are maybe getting overextended and there might be a correction coming down the line?
This on a day that the Leonardo da Vinci painting sold for $450 million, by the way.
Yeah, it wasn't my bid. Yeah, there's always corrections, right? Anytime you have a run like this, you're going to expect some kind of correction. So generally they're small, but what's the underpinnings? Earnings are strong. They're still coming out strong. There is probably a 25% tax rate built in by most analysts. So what happens to tax reform, up or down, could impact that. But the underlying fundamentals of the economy are very good. The European economy, pretty good, and Asia, fairly healthy, just not growing as fast. So I think the economic underpinnings are there, but we could have corrections. Maybe we had a mini one last week.
But this is not a time to be talking about bubbles, you're saying?
I don't see bubbles. Anytime we have artificially low interest rates and those are being let go by the Fed, you worry a little bit. But I think a lot of the earnings driven, the multiples are high, partly because of tax reform and positive outlooks, but I wouldn't call it a bubble territory.
Paul, one thing I see that could be a potential obstacle for the stock market is trade. And I know you mentioned Europe and Asia. You've run businesses, lived overseas, run international businesses. And while I support what President Trump is doing in terms of fairer trade deals for the American worker, I can see that as being potentially a market negative, a stock market negative. Are you worried that trade tension is going to be an obstacle to future equity growth from here?
It will, to the extent it shows up in earnings. So to the extent that it does impact trade, and the sales aren't happening, it will. Now, a lot of the companies are global anyway, so it's where do you originate the sales from, and where do you have earnings? So when I was running more global companies, it seemed like when you'd have trade restrictions, you'd sometimes do better in that country, worse in exporting or importing, but it kind of netted out. So it depends on the severity of the trade rules.